Now for a look at how the local market has fared today. Of course, it has extended the losses that we had seen yesterday. Less losses, though, than we did see in yesterday's trading session. Quite a lot that's happening on the macroeconomic front. It's D-Day for the Fed as it announces its last interest rate decision for 2024. We'll also be getting a decision from the Bank of England. That is tomorrow. And ahead of that, today we did get the UK November inflation that matched expectations. It did come in hotter than October inflation, though, from 2.3% to 2.6%. Looking at how the local market is or has done today, the all share declining slightly by almost 0.1%. That largely coming from the industrial 25 that has extended its losses by 0.7%. But making a rebound from yesterday's losses is the resources 10 complex. Very little, though, there on the gains, just 0.03% above that flat line, and the financial 15 climbing almost 0.33%. And joining me for further analysis on those market moves is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. There aren't a lot of news out today, but some interesting news that have come out. And actually, I don't know if we're actually going to have time to talk about the kind of direction that we saw in the markets today, but I really just want to zoom into, I think, one of the biggest news that has come out, that Nissan and Honda are actually in talks to potentially merge. And I mean, just looking at the automotive industry, it's gone through some significant headwinds. And I'm wondering if this could maybe be the time that we could start to see some consolidation in that space, but also really what this deal has come from, where it has come from, and what it could mean for the landscape of the global automotive industry.
I think you've hit the nail on the head. We've seen the traditional vehicle or our internal combustion engine market strain lately, and some of the old manufacturers coming under extreme pressure, both in Europe and now we are seeing in Asia. Nissan's, of course, gone through a governance crisis since 2018, and lackluster sales, models not well received. The business is essentially under pressure. Now, the rumor is, and these are well-informed rumors being reported by financial journalists, the likes of Reuters and Bloomberg, is that Foxconn, which is, of course, a Japanese company known for, Taiwanese company known for manufacturing the iPhone, they've been investing heavily into electric vehicle manufacturing capacity, sort of seeing that as a future investment and growth path for the company. And they are looking to acquire Nissan. Nissan seems to have, in reaction, gone looking for a white knight to shield them from this potential Foxconn acquisition, and that is really where this talk is coming from. Already, we do know, of course, the largest shareholder in Nissan is the French company Renault. They've already indicated their support for a deal to bring Honda into the fold. And if they do end up acquiring those shares, it would form the third largest motor manufacturing company in the world, assuming this actually does come to fruition and a transaction is done. But it's interesting that it took this sort of external disruptor sniffing around for an acquisition opportunity to instigate this potential deal.
Well, talking about disruptors, we definitely have seen that through Tyme Bank and really just the broader group, Tyme Group. And of course, a majority shareholder of that being African Rainbow Capital. And quite interestingly, as much as we did get the news that Tyme Group reached a unicorn status yesterday, we have seen more of those gains today. At some point, I saw it up about 13% after surging about 9% yesterday. Is this a sign, a significant sign of investor confidence?
Yeah, so look, I mean, so the news yesterday was essentially the capital raise for Tyme Bank, which really marked up that valuation significantly. So the move in the ARC share price today essentially just reflects a repricing of what the market views as the underlying value. It is very clear that this is a surprise to the market. I think the world sort of turned bullish on the proposition since they did this deal in the Philippines, and that specific division sitting at 5 million bank accounts now, looking to have 9 million before the end of the year. Which
Wow.
is like 80% growth in the month.
Yeah.
I think the proposition for that market specifically, and of course these institutional investors really coming in, this issue was completely oversubscribed. And it looks like they've paid up. I mean, frankly, the media they've only sold 4% of their shares,
Yeah.
right? Or issued another 4% of shares. And now we're attributing that to 100% of the valuation, as if they could have sold 100% of the shares at that sort of valuation. That's not really realistic. It's essentially willing buyer, willing seller, and the existing shareholders in African Rainbow probably didn't want this to proceed unless it was at a very excessive valuation. But despite that, they managed to get that off and have it oversubscribed. So from that perspective, it shows a significant investor confidence, and that, of course, reflecting an ARC's valuation in the listed space today, where you do get some of that exposure through that holding company.
All right. Well, talking about investor confidence, where are you placing your confidence today? Your stock pick, Cobus?
My stock pick today, a little bit more boring than everything we've discussed up to this point, is Standard Bank.
Okay.
So essentially, on a relative basis, Standard Bank has underperformed the other banks massively. We saw all of the updates coming through towards the beginning of this month, and since that time, Standard Bank has underperformed the likes of Absa, FirstRand, and Nedbank significantly, and that's despite having from a South African perspective, at least, a generally good operational performance. The real issue seems to be them suffering devaluation in some of their African markets. If we look at a basket of currencies that they have exposure to through those African operations, that is devalued by around 10% to the rand up to that point in the year. Of course, that's going to put a massive overhead. That's essentially like a 10% hit you're taking to your earnings from those markets in rand. That trend is reversed somewhat now, and frankly, in the long run, given that those are growth markets, markets that are somewhat more exciting despite being more risky than South Africa itself, it's part of the reason why you're holding Standard Bank. Along with that expected trend reversal in those currency devaluations, markets expected to do better in a lower rates environment. We think now is an opportune time to get into Standard Bank and get that high quality Africa ex-South Africa exposure.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Cobus. That was Cobus Potgieter from Southern Cross Capital.